All right. Good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this beautiful Thursday, January 19th, 2023. Yours truly, Mickey Blindside here with your market memo. Okay, guys, let's take a look at what's going on. So remember, we had those that options expiration dynamic. I told you guys 4,000, and we might see a slight pullback from there, as as the dealers need to hedge for their gamma and their delta exposures. So we saw a little bit of a big pullback here. We also have the expiration of the VIX futures contract, and we have some short interest actually that is going to be moving over into February and March. And also, if you look at the options chain as well, and I just took a picture of this right before, just right before the opening. I just took a picture of this, the VIX, the February contract, the options contract, and as you can see, we've got some big call open interest around 25 or so, 25 and also around 30. Those are usually calls sold. Okay, those are calls that are sold, and if that's the case where we see maybe another 1-2% drop in the S&P 500. We could see a little bit of a short squeeze in the VIX, where market participants will have to cover, and we could see a spike that I don't think it's going to be a big spike, but it could get up to like 26, 27. If those market participants decide to cover, it shows up in the VIX options chain, but also in the VIX futures short interest. So a lot of the market participants are short the VIX. So we'll see about another percent or two if the S&P 500 can come down. We'll see if they need to cover. It's going to be like cover or perish for them, and so they'll it's possible that it might spike up to about 26, 27 at that point. At 26, 27, if the VVIX, all right, if the VVIX is still under, let's say, 115 or so, even when the VIX is at 26, 27, I may buy some UVXY puts. Okay, so we'll see. All right. A lot of people, I know a lot of you guys, not a lot of you, but I know some of you guys are long UVXY right now, the UVXY common shares. I told you guys that is not a good idea. And look, lo and behold, look at this. Even though the VIX has been going up, I think the VIX was like around the 18s not too long ago, right? Yeah, just a couple days ago, it was in the 18s. And so it's gone up 20% in the past 4 days. But in that time period, UVXY has only gone up less than 10% during that whole time. So, is this or about 10%? So is this really a good hedge for the market? It's not. Okay, you're better off using like a put spread or something like that on the S&P 500. All right. You're much better off doing that than buying this. This decays because there's contango, okay? And some of you guys actually via DM have asked me for a better explanation for contango. So pretty much, contango works like this. If you have one futures contract, all right? So if you've got a futures contract right now, the most active, the front month, which is the February month, right now that's trading at $22.20. But the next month after that, the March contract is at $22.96. So the front month is cheaper than the next month over. So if you actually look at inside the UVXY, all they do is they go leverage long on these VIX futures contracts. It does not track the VIX itself. It tracks the VIX futures, okay? And so whenever there's contango where the front month is cheaper than the back month, what ends up happening is on a daily basis, UVXY, the fund managers, need to roll a part of that front month contract into the back month. And so when they're buying a more expensive contract on the back month, they buy less contracts because it's more expensive. Okay, and so because of that, there is this decay that happens within the UVXY ETF. So one of the things that I've told you guys repeatedly, one of the tools that I use is something called VIX Central. Okay, you can go to vixcentral.com. It's totally free. It's 100% free. And you can actually chart how much contango there is. Now, contango has been decreasing for the past week or so. So that decay is slowing down, but still, as long as this contango is a positive number and it's sloping and the term structure is sloping up, so as we get to further contracts, it keeps going up. If we see this, that means there's going to be decay in UVXY. All right, UVXY. However, if this is a backwards, if there is backwardation, let's say the front month is higher than the back month, then yes, there's tailwind for UVXY. But those conditions don't usually last long. We're more likely to be in contango than we are in backwardation when it comes to the VIX futures. Okay, that's just how it works. So I am, again, my plan is this. If we see a VIX spike to 26, 27, and if the VIX of the VIX also stays below 115, I'm going to buy some UVXY puts that are like 6 to 8 weeks out the money. And we'll write those down. We did that trade. Back in October, November, and it paid out really well. We got like 200 to 300% gain on those. Those are pretty good. I like to hold it for a couple of weeks. That's how you can get that, that nice rate of return on those. It's nice and easy. No active management required. I like it. We just ride down that volatility decay. It's one of my favorite trades. That UVXY puts. So buying UVXY puts and selling SPY puts is probably where most of my trading profits come from. It's the easiest. Shorting volatility is the easiest trade that I know. It really is. It's my most highest percentage trade. Usually I have a 80 to 90% win rate on those. For selling SPY puts, I've never lost money on those. UVXY puts, yeah, every once in a while it doesn't work out, but generally it does. When you're patient and you wait for those nice levels after those VIX spikes, generally the odds are in your favor that you're going to win those. And those are some really high percentage wins for me. So I will be continuing that play, and I think the setup is there. The only thing that I have right now that's kind of worrisome on UVXY is that they haven't had a reverse split in a while. Okay, usually if you look back in history and whenever ProShares does their reverse splits, they usually do it right as it breaches 8 and gets into 7. But for some reason, they have not announced any type of reverse splits, even though it's at 585. So I'm not really sure what's going on. I've been looking through the ProShares website. I've been looking through all of their material, trying to see if there's any indication of when they're going to do a reverse split. Because when those reverse splits happen, sometimes the options that you buy could they'll change the amount of shares that each options represent, and then liquidity could dry up for your expiration if that's the case. So I'm kind of worried. That's the only worry that I have, is when are they going to do that reverse split? Because preferably I'd like to purchase UVXY options after a split. I don't like to hold it through a split. So right now, with it being this low dollar amount, I'm not sure when they're going to do it. I mean, any day now they could announce it. So that's the only risk that you really have. I don't like to hold UVXY options through a reverse split. They do a lot of reverse splits. It's like almost every couple of years they do it. I mean, they have to, because just look at this. Look at this chart. Just look at this. This is just a decaying product. It just decays, okay? Long-term decay, and then, it just decays, all right? Just because of contango. It's more likely that the markets are going to be in contango for the VIX market than they are in backwardation. So that's why you see UVXY just decaying over time, all right? Speaking of the market, let's look at some market internals. So the last 2 days in the S&P 500, we've had a sell-off pretty decent sell-off at that too, you know. We hit that 4,000, just peaked right over it, and then we just dumped about 100 points since then. But having said that, let's look at our lie detectors, our market internal data, okay? And if you look at the New York high-low line, we have now got a signal that we have not seen in all of 2022. We haven't seen this since 2021. All of our moving averages are now curling up, and all of our faster averages are above the slow average. So I use the 20, the 9, and the 4 exponential moving averages for the New York high-low line. Generally, what you want to see, okay, is that, you know, if you're a bull, that is, if you're bullish, what you want to see is that the 4, okay, you know, the 4 is above the 9, which is also above the 20. That's what you want to see. You want to see the fast ones up on top and the slower ones on the bottom. Okay, and again, we have not seen that. We've always seen, all of 2022, we have seen the 20-day exponential moving average being on the top. All right, we have finally crossed that point yesterday. Yesterday and the day before, the New York high-low line actually had more highs than lows on both days. We were positive on both days. So even though the market went down 100 points, there were more stocks in the New York Stock Exchange making 52-week highs than there were 52-week lows. Okay, so sign that the market is still resilient. All right, we're still curving up. All of our moving averages are curling up. You know, again, that setup for that rolling bull market is here. I mean, we've been talking about it since June and July. So, you know, it's about time that it happened. You know, these things can take some time. You know, I said the bottoming process can take out, you know, it could take, you know, several months. And we're seeing that. And so I'd like to now see this line, the New York high-low line, make a higher high. And if it can make a higher high, which is not too far away, actually just a couple more good weeks and it makes a higher high, we could see that pullback. But I'm already seeing that, you know, the signs are already improving. I mean, if we look at the junk bonds ADL line, our advanced decline line on the junk bonds market, this has also been going up in the last 2 days. Even though the market has dumped about 100 points in the last 2 days, the junk bonds high-low line is still going up. All right, there is some risk on in the bond market right now, and especially in the junkiest part of the bond market, which is junk bonds. Okay, so we're starting to see that it's making that higher high and it's not backing down. Okay, so if we see this dip, remember how I said in a week or two ago, if we see a dip and our market internal data remains strong, that I'd be willing to buy the dip. Well, we're starting to approach those levels. We're not that far. We're not that far from it. Okay, I just need another % or two. All right, I think another % or two, and then I think that will pose a very good opportunity to buy some of this, to buy this dip. If we look at the New York AD line, the New York Stock Exchange Advanced Decline line, also too, didn't really drop all that much. That did drop a little bit. You know, there were obviously when the market goes down, there's going to be more declining issues and there are going to be advancing issues. But so it did go down, but it didn't really go down all that much. You know, with a 1.5% sell off in the Russell and in the S&P 500, I thought that this was going to drop even further. I thought it was going to drop like, you know, at least like, you know, at least more. But that's not the case. It barely dropped. It barely dropped. So it shows me that there is still some strength in small caps as well. And so I definitely want to get involved. I have an alert set at 1811 or so, just below 1810. I think if it just goes below 1810, I'd be willing to buy. I am going to buy IWM leaps, okay? I'm going to do some of my buying there at 1811 on the RTY contract, which comes out to be around 1810, comes out to be around 177 or so in IWM. I'm going to be buying some deep in the money leaps here, but if it gets to 171.51, I'll buy even more. Okay, so I have two levels, 171.51 on the IWM, but also on the RTY contract. If it gets to below 18.10, I have my alert set at 18.11, just above. So if it gets down to there, I'm also buying some in the money calls. Let's actually take a look at IWM in the money calls. Which ones am I looking at? Of course, it also depends on, you know, the IV structure at the time that this happens, but you know, right now I'm either looking at the June or January's, and also it depends on the implied volatilities as well. You know, sometimes when the IV spikes, we could see a spike in some of the further dated contracts, although it kind of looks like right now, it actually looks like IV wise it's cheaper to get the 729 day options in the money. So we'll see. It's either the June 2024 or the January 2025 contract I'm going to be looking at in the monies. I like the deltas anywhere from 65 to 80 as where I would like to go. Again, it depends on the IV skew of those in the money calls. I generally like to go where the IV is the lowest. And right now the IV, it looks like it's lowest when it comes to in the money around here, around the delta mid 60s or so. So again, I'm willing to buy there, and I'll be selling poor man's covered calls against them, and then I'll be riding this up all the way through. I think it could, if we rally, if we see a bull market rally, and if we see strength in the small caps, I think small caps could go up to like, you know, let's say 220 or so on the IWM by sometime by mid this year. I know that sounds kind of ridiculous, but you know, with the strength that we've seen and just what the market usually does when all these shorts just get out of the market and when there's a seller strike, I mean, IWM can really run during those markets, and we've seen that, you know, right after a credit tightening cycle, when credit loosens just a bit, we see IWM become one of the strongest indices. Generally, that's the case historically. So we have, you know, history on our side there, and I will be getting into IWM. I just want to see a further pullback, which is possible. I think with you know, this options expiration dynamic, once it goes down, and then once we start seeing some of those short interest increasing on the VIX term structure. Also, if we see this, the S&P 500 just come back down just a little bit, like 1 or 2%, we could see a little bit of a short covering on those VIX futures contracts, and we could see a VIX spike that could pull the market down just a bit further, just to get to our buy level. And again, if we get to those buy zones and at the same time our liquidity data is still improving, again, New York AD line is still up, New York high-low line, all the moving averages are still up and still curving up, and our junk bonds ADL advanced decline line is still curving up, boom, that's a recipe right there to buy the dip. So the setup is still there. The setup is still strong. We just need price to come down to our levels. We still must maintain our patience and discipline, my two favorite words, patience and discipline. Okay, so I know some of you guys don't like the patience and discipline approach. That's just my approach. You guys are free to do what you feel is right. Okay, so that's that. So that's the market in a nutshell. What else are we looking at today? Let's look at energy. I know a lot of people are trading energy. Let's actually take a look at that. Crude oil, I mean, wow, what a reversal. Crude oil, it was in the 70s, 73 or so, you know, at the beginning of the year, and now we're already in the 80s. It tried to get over 80s, and now it's pulling back from there. We'll see. We shall see what happens. I think it has a lot to do with some of the distillates, like you know, wholesale gasoline prices. I think if gasoline prices reverse, and wow, if gasoline goes above what is this, $2.5966, $2.5966, if it goes up 3 more cents, if it can go up 1 more % or so today, that would make an outside day up on gasoline. Gasoline, if you're actually looking at the gasoline market is making higher highs and higher lows if it can close at these levels. If it holds this level today and closes at this level or above, it'll be a higher high, a higher low on gasoline, okay? And if gasoline goes up, what did I say? Gasoline goes up, the crack spread widens, and then the economics of buying crude oil from the refineries improves. The economics of that improves. And so, if the crack spread widens, that incentivizes refineries to buy more crude to produce gasoline. And so, or other distillates. And so, it looks like it's going to be a trend reversal. If it can close here, it made a higher low. It's attempting to make a higher high now. Okay. So that could bring crude up. It looks like crude on a closing basis has already made a higher high. Interesting. Okay, we'll see. We'll see what happens. Maybe this is the impetus for higher oil prices. It could be. All right. I'm still going to remain patient. I'm trying to get into oil names myself. I mean, you guys know what I'm trying to get into. I'm still trying to get into names like, Antero. I'm still trying to get into this name right here. Either some leaps or whatnot, Antero, and then also to CPG, which is a more junior oil driller, oil producer. This is definitely one I want to get into. They're increasing their dividends. They're increasing their share buybacks. It's a wonderful company. It's a more junior oil play, but I think this would be a very good risk to reward to risk if it can get down. I still think that we could have some volatility in the oil market, so I'm not willing to put some money to work in oil as of yet, but I think soon. I think the time is coming soon. So that's that. Nat gas. Let's talk about nat gas. I know a lot of you guys are trading nat gas. I see a lot of people on Twitter losing copious amounts of money, lots of money on Boyle. This thing has come down. I mean, remember when everybody was talking about the polar vortex and the Christmas snow is going to be like one of the whitest Christmases on the East Coast and yada, yada, yada. Well, anyway, but since then, Boyle has come down 60. That's right, 60% since then. This is why you don't make decisions on weather. You really think that the weather is going to improve nat gas? I mean, it would have to be like a really surprising weather, something that no one saw coming, but everybody saw that winter weather coming. Everybody knew like ahead of time, okay? So it's not like you're going to catch the market off guard with that weather, okay? Right now, what's keeping Henry Hub up right now is, right now the export terminals just reopened or are about to reopen. We had that major fire in the summer that kind of stopped all the exporting. Well, not stopped, but it slowed down a lot of the exports of our natural gas to Europe. And also, too, during that same time period, Europe just stockpiled a lot of natural gas, and they still have a lot because, they've had a warmer than expected winter. So that dynamic is not going to change, I think, anytime soon. I think there's still about a couple months of that dynamic. So I don't really see nat gas going up just because of the weather or just because there's a cold snap here in the United States. I know a lot of people that are in Boyle, they're doing a lot of wishful thinking and retweeting about this like polar vortex that could break on the North Pole and all this cold air could get everywhere. I mean, that is very, very wishful thinking. If you want to believe in that and if you subscribe to that theory, I guess you can. But me, I'm not going to subscribe to any of that because that's just noise in my opinion. In my opinion, really, I think when the nat gas market could turn up is actually around the end of summer. And here is why, okay? This is my new thesis on natural gas, all right? And it has to do with fertilizers. So if you guys remember we talked about, inflation, and back in the summer, we talked about corn and wheat prices and soy prices. So last year, we've had a huge spike in fertilizer prices. So last year here in the United States, a lot of farmers did not fertilize their soil. Okay, they just didn't because of the price spike in fertilizers. Okay, next year, or this year, okay, this year in the summer, I think, and nobody's talking about this so far, no one, all right, I think there's going to be a shortage on potassium ash, or potash, they call it, okay? They call it potash or potash. Usually it comes from Ukraine and Russia, all right? And so if we see this potassium ash shortage, which is usually used as a fertilizer, we could see a spike in nat gas prices at that point. Nat gas is used to make something called urea, which is used in a lot of fertilizer products. And, and again, farmers haven't really fertilized their soil last year, so they're going to have to fertilize either this year, at the latest next year. But a lot of farmers will have to fertilize this year. So we could see a catalyst for higher nat gas prices as farmers look for alternative fertilizers that are going to be, natural gas based or things like that. And so we could see higher nat gas prices into the end of 2023 and into 2024. At the same time, if it becomes too expensive, we could also see some food shortages globally. Not here in the United States, though. Here, we're people forget that the United States is one of the most productive agricultural countries in the world, okay? Domestically, we're going to be fine. There's not going to be a food shortage or a famine here in the United States, but over the world, we could see that, okay? At the same time, especially in emerging markets, okay? Emerging markets, we could see some food shortages around there. At the same time, if the dollar goes up and inflation goes up at the same time, and there's a demand for dollars for energy as well too, I mean, that is usually how an emerging market solvency crisis begins. Okay, it begins with the dollar rising, inflation going up, and costs going up, and food shortages happening. So we could see that, and that would spike natural gas up. Okay, I'm not trying to predict the future. Again, I'm just anticipating what could happen just based on the data. And again, right now we're seeing already potassium ash shortages looming, in the near future. And again, if that happens, then I think that, there's going to be a lot more nat gas that needs to be used to make fertilizers. And again, that we've been talking about getting long on Mosaic, which is a fertilizer company. I would love to get involved in this. And again, right around that planting season, I'm going to start buying some in the money leaps on Mosaic. All right. So this could have a wonderful end of 2023, beginning of 2024. While the rest of the market is dumping because of solvency risk or whatnot, we could see pockets of strength in certain companies like nat gas companies, oil companies, and fertilizer companies. So I want to get involved in fertilizers. Mosaic is the inflation stock, and I will be getting into this as we get closer to planting season. Of course, I'm going to leave some dry powder just in case if it goes down a little bit more, I'll be buying more. Okay, this is a very high conviction trade of mine just based on the macro environment going forward. Okay, and as long as the data holds, that potassium ash shortage, as long as that the data is showing me that, I am going to go long on Mosaic. Okay. Natural gas prices going up, and also, that in it by itself is not going to increase FLNG. But if we see shortages, if we see nat gas shortages in different parts of the world, all right, then it becomes then the dynamic is the demand to ship it to those places will increase, and that's when I think FLNG will really take off and have some legs. I am still in this name. I'm still in those leaps. We got a little bit of a drawdown, but not by much. I'm just waiting for an opportunity to sell some covered calls on this. All right. Speaking of tanker names, some of our other tankers have been doing extremely well. Like, for example, Star Bulk is the other one we're in. I mean, talk about selling covered calls too early. I sold covered calls here, and I thought it was going to just bounce around here for the next couple of months, but that's not the case. It just went right up, and it's actually above my strike right now. for my covered calls. So if I get assigned on February, it turns out then if I get assigned on this, and if it closes over 21, I'll just exercise my long-term call as well too. I'll just exercise it early, and I'll end up collecting about 15% for about 6 weeks. Not bad. I mean, it's not bad. It's profit is profit, but yes, my profit is capped if it just keeps running from here. So I do wish for a pullback, okay? Even though I talk bullish all the time, you know, I actually make more money when there's actually volatility because I am a premium seller myself. So that's how I keep the edge on my side. But anyway, that is what I see so far. And that's my, you know, I don't know. I don't know if this is going to end up getting under 21. I really hope so. If it gets under 21, let's say it gets around 20 and a half or so, and I see it bottoming, I may roll the contract into the March contract. I think, oh yeah, they finally got the March contract. This one wasn't open. Oh, it just opened today, I think. Oh, nice. Okay, so I'll let the market kind of thin out the bid and ask spread. Once we start seeing some open interest going up and some volume in this, the spread will tighten. And once the spreads tighten, I may roll. And it's got to get closer to 21 because right now, since it's over 21, my roll is not going to be as favorable. But if it comes down just a bit, I think the roll will be favorable. We'll probably get a little bit more credit just to roll it. I'm going to try to roll it out and above. So hopefully, instead of the 21 strike, I can get to like a 22 strike. That would increase my rate of return, max rate of return, by another 33 percentage points. So instead of max 15%, it'd be more like my max would be 45% if we get over 22. So that is how I'm going to play SBLK. And again, on the Discord, I'll post that trade live once that happens. Okay. Crypto. Let's talk about crypto for a second. And I know a lot of you guys are interested in crypto. I'm seeing open interest go up. Again, it's still not where I want to see. I want to see $6.5 to $7 billion on Bitcoin or Ethereum open interest. I am noticing that the Bitcoin open interest has been higher. I don't know if it changed in the last day or so. I checked on it last night, but my plans still haven't changed. I mean, you know, day by day, as you can imagine, my plans really don't change on a day-by-day basis. You know, Bitcoin has been strong. Oh, wow, it's up today. That's interesting. It was actually down earlier, but it looks like Bitcoin is up today. So is Ethereum. That's pretty strong. I was hoping that it comes back down, but I guess it's not. I guess it kind of ran away from us. I mean, it is what it is. I'm still waiting on this ETH to gold line. I mean, ETH compared to gold, it might chop around for a bit. And it could hit this line maybe later on this summer or something like that. I think maybe for this season, I think maybe we missed out on this. It could be we missed out. We'll see. I don't know yet. I don't know. It could be that we missed out on this trade. But it is what it is. I mean, the opportunities are abundant. There's so many things going on in the market right now. I don't think we need to stick to one asset class. We can afford to miss out on a few opportunities. There's just so many opportunities looming on the horizon. You know, I think the crypto trade, you know, it's just one play out of many. Okay, it's one play out of many. So if you missed it too, don't worry. There's going to be so many opportunities going forward. I don't think it's going to be an issue, okay? But I do wish for a pullback. And if we do get a decent enough pullback, maybe if that short interest on the VIX, if it increases, or if the short interest, you know, all those people that are long, the VIX futures contract, if they get pushed out and they need to buy to cover, and we see the VIX spike up to 26, 27, I mean, we could see a pullback in crypto as well. However, it's been pretty strong. I mean, I'm not going to lie. Even though markets have been going down a bit, crypto has been quite strong. So I think, you know, and I've told you guys this before in the summertime, I think crypto is more dependent on junk bond market than anything else. I know a lot of people on Twitter, they compare Ethereum to like the NASDAQ, but I think a better comparison is crypto to small caps. And I think the reason why there's a correlation between the two is because they're both very, very much, very, very sensitive to the junk bond market. I think that's where the correlation comes from. It's not that necessarily that they track one another, but it's just both of them are very sensitive to the same variable, which is junk bonds. And so I think junk bonds has been really resilient and is showing in crypto right now. So if you're a crypto trader, if you're one of our crypto traders here at Checkmate Trading, you really need to pay attention to our junk bonds advanced decline line. I think that's going to be, your saving grace in trading this. As long as this is curling up, I don't see weakness happening in crypto. Okay, and crypto I think is very much dependent on junk bond market, probably because a lot of crypto firms rely on cheap debt to continue their operations. And so as long as they can get cheap debt, which is what's happening, as the advanced decline line is actually going up, junk bond yields are actually coming down. So we're actually seeing a lot of debt activity happening within the corporate bond market, which is not what the Fed wants to see. That's definitely not what they want to see, but we'll see. We got another CPI report coming out, in the next few weeks, and in February, that one I think is going to have a bigger than expected drop, and then we'll see how strong the Fed's backbone is. I do think that they might, even still in the midst of the junk bond market strengthening, I think they might, start getting done. They've already started pivoting and saying, dovish messaging. They've already slowed down their rate hikes. If we see a bigger than expected drop in the CPI that's coming up for the January CPI that's released in February, we could see even more softening from the Fed. And if that happens, I think junk bonds market is just going to keep going up. And if that's the case, crypto will probably have a nice run too. Okay, but we shall see. I'm not trying to predict the future. I'm just anticipating what could happen, just like a good chess player would, 5 or 6 moves ahead. You can't predict what your opponent's going to do, but you can think 5 or 6 moves ahead, right? Like a good chess player would. That's why we call ourselves Checkmate Trading. Anything else, guys, you guys want to look at? Any requests, any questions, comments, rude remarks? This is your time. Going once, going twice. Sold. All right, in that case, that will wrap up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, next week I'll be back on Tuesday, Wednesday, Thursday, usual time, 30 minutes after the opening bell of the New York Stock Exchange. I'll see you guys then. Trade safe, and see you guys next week.